Vixen. You are now tuned in to Talk Money Baby. That's right. We are going to discuss money investment, stocks, and just overall ways of, managing your money. So, my advice today is to invest in stock. Say you shop at your favorite store. Go look up that stock on the internet. Since it's your favorite store, you're more likely to spend your money with them in stock. So therefore, and then stay in your range in your price budget and whatnot. Because my opinion is invest in stock. Say you have $1,000 consistently in the bank for 1 year. You're only going to get 0.01% interest, which is $5. Think about that. You left your money sitting in the bank because you're saving it. You don't want to touch it. It's savings. That's not your emergency fund. It's savings, okay? And I suggest, separating your investment money and your savings money and your emergency fund, all right? With that being said, we're going to talk about price tracement pattern, meaning the tracking range in order for you to have the best buy-in in order to profit off the start. Let's see. GME, GameStop. I bought in the GME back in early November when it's about probably $11.25 per share. Now GME is trending. I mean, it's soaring. The best way I could put it is, it's increased overly about, I want to say, me from what I profited, GME has increased nearly 300%. Is actually up to the average between $37 to $40 a share. It peaked at around 42 earlier this week. It is Friday. I generally don't suggest buying at its peak. That's why you need to watch it and see when it retracts to about 50%. Earlier this year, due to COVID and less spending, the economy shifting, whatnot, you can see the price range, went all the way down to nearly $4 a share. I wasn't buying stock at the beginning of the year because I had other interests. So now that I'm highly involved in the stock market, I was lucky to buy in around maybe the $11.25 range, okay, which was early November. If I would have bought in around $4, per share, and my profit margin would be nearly $30 per share. So it's best to track the retraction range and find your best buy-in and then sell a certain amount of your shares by the time it gets to its, I guess, chart high point, meaning that its previous high point, you want to make sure you track it. So as you can see, based on the stock being so low back when it was $4, its previous high point was $13. Now, the hype about GameStop is, new releases of games. There's more spending. People are getting money. When we have peak in economy and gaming and, children and even adults still play, video games and stuff like that. So the high point was $39, $37. So me personally, I'm not cashing out. I'm going to wait it out. I don't think I'm going to take necessarily a loss. I probably can still profit additional 100% on top of what I spent if I wait a couple of months. So I'm not selling, and this is GME. Now, that was my example of price retracement investing pattern. GME is a good example because when it dipped, some people probably sold or they held on. And if you held on when you first bought in around $4, you're definitely making money, almost $35 per share at this current time. And GME, GameStop is shifting and averaging. With that being said, I suggest take a couple of dollars out your savings and find a stock you would like to invest in and make sure you find the range, which is the mean revision pivot zone that you would want to invest in order to make your highest profit margin when it does peak. This is Zora Lou, the Comedy Vixen. Thank you for tuning in to Talk Money Baby. See you next week.